What happens when you combine the most innovative, eccentric and charismatic leaders, disruptors and founders from tech with the pedigree and history of one of the most established institutions within the City of London? The Searching for Mana podcast will be produced in partnership with the London Stock Exchange. I'm Lloyd Wahed, the host of Searching for Mana. We're going to be interviewing some of the leaders, influencers and disruptors in the tech space, where I'm going to be trying to dig in and find out what's their mana, their superpower, their magic. Welcome on to the Searching for Mana show, Stani.
Thanks for having me here, Lloyd.
Thanks for coming into the studio in North London. Yeah. Really excited to go through a bunch of topics that you seem to be out there leading on, some of the thought leadership and actually just as importantly doing and building towards in the space. So just in the briefest way possible today, if you could just introduce the organisation, please.
Yeah, so I'm the founder and CEO of Avara. And Avara is it's kind of an umbrella company of multiple companies that are in Web3. So we're best known from the Aave Labs, which is the creator of the Aave protocol. And Aave protocol is a lending and borrowing protocol built on smart contracts that lives on Ethereum and multiple other networks, including so-called layer 2s that are built on top of Ethereum. And there's roughly 35 billion net deposits in Aave, and a lot of those deposits are actually stable coins. And we do other things at Avara, so we're also known from Lens protocol, and Lens is a layer 2 which is adjusted for social transactions. So where Aave is figuring out the financial capital and financial opportunities, Lens is figuring out the social capital opportunities, such as how do you own your identity, truly, how do you own your audience, and enabling this with the blockchain. So that's basically Lens. It's a composition of L2 network, smart contracts that enable these social primitive ownerships and a decentralized storage. And lastly, Family Wallet, which is a very simple, easy to use wallet where you can log in with an email or a phone number, and then you can explore both Aave, Lens, and everything else that is in Web3. And we started, I think, 7 years ago, and I think Web3 and the whole blockchain will take a few decades to mature. So there's a lot of work still ahead.
Thank you. Very humble, not mentioning any metrics, but certainly in that we're in April 2025 for context. There are statistics I hear that Aave now has 25% of the DeFi market, and of course that's a generic, and I don't know if it's accurate day to day, but broadly speaking, you have a significant market share.
Yes.
So congratulations. And
75%, not to talk too much about numbers, but 75% of the whole lending and borrowing landscape is built on Aave. So either the Aave protocol or someone using the Aave technology to build their own product.
That's wild.
Yeah.
My gosh. So if we went into that, and then we will come back to, clearly you set the scene for really quite a large cultural shift that you're leading here. So it's fascinating to think through various economic and psychological behaviors that you're seeing. But just to give the audience, if they don't know, some context there, what do you mean by that? So 75% of lending, this has been a real product market fit for, you could say, Web3, and certainly DeFi is, I think it's potentially a term you fashioned.
Amongst a few other people, but it was very early.
So that 75%, like, why has that been such a product market fit? And just talk us through specifically what's happening there. I know that would take a long time, but in a encapsulated version, please.
I mean, when we started to build Aave, we were actually known as a project called ETHLend, short for Ethereum lending.
Yeah.
And I was still in the university, and basically I stumbled upon on Ethereum. And
this is Helsinki,
yeah.
And you were studying law.
Exactly, yeah. So I built internet applications all my teen life and early 20s, and early 20s I actually started to build more fintech applications when there was this really exciting kind of a boom on crowdfunding, peer-to-peer lending, and just around marketplace economy. And I was very excited about the idea of, we have so many financial transactions that are happening on paper. So obviously to me it makes sense that if you could just make this work in digital, we get efficiencies and network effects. So a lot of regulation came at that point, so I was really confused as a early entrepreneur in my early 20s. And at the point that I was going for my university degree, I didn't go for computer science because I already knew quite a lot about the technologies I was using, PHP, Ruby on Rails, which was a big kind of like a meme back then to build on. And I wanted to study a bit more on the regulation and RSN compliance. So end of my studies, when I stumbled upon on Ethereum, I figured that this is quite interesting because you can have this computer running on the internet, and it's technically like in theory it's unstoppable. So you can build your applications on this operating system, and they will be always there in the form that you created. And that to me was really powerful, because that means that you can build something that is very resilient and can't be just turned off. And when I was building fintech applications, one of the challenges I had is that you had to rely on 5 to 8 different partners, different vendors, identity verification or some other tooling. And if something breaks in their APIs, you have to go to that team, and you have to also ask a permission to use their endpoints. Where in the Ethereum world, you didn't really have this, so you could just go and interact with the already smart contracts that are built, like let's say Chainlink that provides data of different price sources. You can build your product around that, and many products even built today on top of Aave. And at that date, 2016-17, there wasn't a concept of decentralized finance. It was just interesting applications. We called them dApps, decentralized applications built on Ethereum.
What would be an example of one or two that were the dApps that you saw then?
Well, they were really kind of hobbyist projects, like raffles, for example. You put some amount of ETH, let's say 1 to ETH, and this is when ETH was very low.
Yeah.
For example, we're talking about like $3.
Yeah.
Per Ethereum.
It's pretty low today as well.
Yeah, exactly. Much lower back then. You put it into the contract, and after a period of time, there's some sort of someone can draw and can be a winner of that. Some were just basically minting an NFT, like CryptoPunks, for example. But there was a lot of emphasis on finance too, because a lot of these tokens, they had some sort of market capitalization that were in Ethereum. And this was the time when stablecoins, which is like big thing now on chain, didn't exist yet. So stablecoins were only on centralized exchanges. You had USDT, and that was pretty much.
So you're in a position, if you're somebody who has been curious or has conviction in Web3 at that point, where you might have some Ethereum, perhaps a bit of Bitcoin, you might hold a Punk, but you don't have the ability to move away from the volatility. You don't necessarily, because you might have what could be perceived on chain or on paper as some net worth that's significant to you, the ability to have liquidity from that in the real world.
Exactly. And so if you see these constraints, very little you can actually build. So what we believed in this technology. So we built basically a peer-to-peer lending type of a system on smart contracts where in a decentralized world, you don't have the system of credit scoring or identity yet. This will happen in the future, but not widely accepted now or nothing in the past, right? So the way we did these transactions is that we required a collateral. So you put a cryptographic token as a collateral and you borrowed Ethereum. And because there wasn't any stable coins, you had to peg the Ethereum price to $1. So you borrow, let's say, $1,000 worth of Ethereum, and in 30 days or 90 days, you return 1,000 USD worth of Ethereum. So you get that stable borrowing cost, but at the same time, you have to return different amounts. So you had this limitation. So I think we continued with this for a while, and then stablecoins came on chain. So
in that zone there, I always say, like, you know, when asked why do you do this show, there's a few reasons, but one is some frustration around the entrepreneur's journey in any research I can do or biography or an interview. This is definitely better now, I think, because of podcasts, where it's like, but there's a zone where I'm hearing that Steve Jobs is suddenly a multi-billionaire and the things he's doing I can't necessarily relate to, and we'll get to that with you. But there's also a zone where you're a curious student who's kind of found some conviction in something, you're an entrepreneur, and then suddenly you found what might be a product market fit or some traction, some success. Is this that moment for you then? Like, let's sort of just quickly move on necessarily to the next bit. Like, what does that look like in what was the ETH lending business? What's the volume? What's the experience for you?
For ETH lend, I think at the peak point, we had maybe like 5 million worth of TVL, and TVL in our world means it's effectively AUM. So how much value is on the smart contracts and how much people are trusting these smart contracts to trust them with their funds. Maybe the largest protocols at that time or systems that hold ETH could be in around 30 to 50 million. So the whole space was really small, and in terms of user base, we're talking of about a few hundred users around the world. So it's that small.
A few hundred users. So these individuals are getting the functionality from, say, 50,000 that is being lent against.
Exactly. So it's really small, and the first 3 years, I would say that, or a couple of years, we realized that what we were building isn't the most efficient thing. So what we moved towards, and the whole industry moved towards, is a more pooled model. And that's a kind of like a benefit of the decentralized finance, is that you pool funds together, so you create more liquidity, and then users can withdraw, so they are not locked into these lending agreements for a fixed period of time. So we re-engineered ETHLend, rebranded also from ETHLend to Aave, and we re-engineered into.
Why did you rebrand?
So the rebrand was from ETHLend to Aave.
Yeah.
Aave means ghost in Finnish, and it kind of symbolizes the way we think about it. So we think that DeFi or these blockchain-based systems, once you create them and deploy them, you become like a ghost. So it works in the background, and it's a community of multiple people, and the identities are kind of irrelevant because it's about the technology itself. So that was the rebranding, and the technology-wise, we moved into something that was a pooled model. So you could put funds into a pool, and at that time we already had stable coins, and you start earning right away every second, compounding, and you can pull out the funds if you don't want to earn anymore. And there's always this little bit of excess liquidity of the pool from 10-15% for these in and out movements. And I think that was a game changer, because now you can supply, let's say, stable coins, which are like dollars, but on the blockchain, earn significantly. And at that time, we were in a low interest economy. So the most likely what you will get as an interest rate in your bank could be most likely 0%.
Yeah.
And you had to go to alternatives lending, peer-to-peer lending, and all this interesting innovation that happened around the world, and especially in UK. And DeFi created a balance for that as well. And if you're earning nothing on the traditional world, but you can earn much more, like 2-3% compared to zero, it became more interesting, and that created a little bit of product market fit. That actually there's demand for yield, there's demand for borrowing to finance different opportunities, and that started to actually cascade and create this different innovations and growth.
And about at this point, I'm assuming somewhere close to there or shortly after, competition must start coming in.
Yes.
Because you've proved out, okay, here's a big opportunity. And even the name in Finnish, which I love, Ghost, there's another name very similar that shortly comes thereafter. But based on what you've told me, ratio-wise, and it's a very collaborative space, you're still winning leaps and bounds. So I'd love to know, slightly on the competitive edge that you managed to, just because you're first doesn't mean that you're going to retain pole position. How's that journey been? Why do you think you've managed to, from that point when competition comes in, still stay so far ahead?
Yeah, I mean, being the first mover is the hardest, in my opinion, because you have to set basically a model that supposedly should work, and you have to test that model. You don't have any reference points, so you have to go and build a little bit blinded, and then you have to create standards as well, because even like token standards are important, and things that kind of like makes the composability easy and other developers to build on. Being a second as well entrant in the market is also not as easy, because you basically have one reference point, but there's a lot to innovate. But then afterwards, it's much easier when the space is a little bit established, and you can actually come and look what everyone is doing and just build something better, and attract users. So it's really hard. So I think we lost a lot of battles very quickly to new protocols, and then we regained simply because we kept on innovating. So the whole kind of like a secret sauce of our work is just purely like focusing on innovation, like what we can do better to move forward and make our products more appealing, and that helped us to win the market share.
So, where have you found yourself? Just to finish on this kind of whistle-stop tour through the journey of the company you founded and your position in it. Where have you found yourself? Famously, entrepreneurs can, be generalists and control freaks and own every single function, and this can change in peace or wartime, which has been a big narrative over the last 6 months in our space. Or they can have an approach where there's, founding teams and obviously collaborative, but really, kind of deep domain knowledge and maybe owning product or technology or commercial. I'd love to know a little bit about you, Stani, as a leader, and perhaps there's been an evolution, perhaps there's been learning, or or not. So I'd love you to talk to that.
Yeah, my style probably is more leaning towards like the product side and innovation. So there's two things I care quite a lot. So one is the product and what we can innovate there, and the other side is the growth. And they go both hand in hand, because you might build something really interesting, great, innovative, but then if you don't figure out the go-to-market strategy and figure out like how to grow the actual product and get users, there's two paths. Like one is, people forget that the product exists or never get around to that, or someone bigger comes and copies, and then takes that innovation and to their own distribution. So that's why I think is that technology by itself or a product is not really enough. There needs to be interesting growth strategies. For us, it was really helpful because we realized that there's a lot of opinions in our space and communities that aren't really tapped into, and each community in the Web3 space is a potential user base. So we went and listed assets where other protocols weren't very keen on listing. For example, listing Link, which is the Chainlink's main token, and that unlocked the door to a completely new audience. We listed USDT back when it was really controversial to have that as an asset, and we listed it as purely as a borrowable asset. So we basically did things that others had strong opinions, but not opinions because of business reasons, but because of their personal beliefs, and that helped us to grow. And one important thing for like my organization is that we try to keep the organization as small as possible. We're now roughly 80 people working across multiple products, very senior team, and I think that's where I kind of like I see the sweet spot, because once you get above 100 or 150 people, you lose the ability to work with everyone, and then it's harder to keep the quality extremely high and also focus on the level of detailing. It's still possible, but it takes a lot of time to get everyone on the same kind of like level of craft.
Yeah, well, enjoy it whilst it lasts. The background that you've briefly gone through, makes so much sense in hindsight. Then why this success has happened. I don't know. There's so much to do and so many challenges. Because I think a lot of people in that kind of garage corner at that point would have purely been programmers and engineers.
Yeah.
And you've come at this from a perspective of understanding genuinely peer-to-peer lending and looking to do that regardless of it being on the blockchain. And then you've seen blockchain, which is the right way around, as the solution, not just let's just go do it. You've got a legal background in education, which is useful, unbelievably so, when you've got to look at terms and conditions, regulation, partnerships, and you wear a product hat. So again, as you say, you can have the quickest and fastest and best technology, but that's going to do absolutely nothing in the medium term unless you're thinking about your user base. So this whole concoction makes a bag of sense. The one piece I want to just find out to finish that psychology of why you're doing this and doing so well so far is why. Because you said two things. You said I focus on product, obviously many things as well, but also growth.
Yes.
And so growth is an obvious metric if you care about something, which can either be finance or just winning on a scoreboard. But for you, it feels like this is a lot deeper. Why are you doing this? Why do you care about this?
Yeah, I think it's very interesting. I mean, as a technology, I do think that blockchain is really fascinating because it can create different types of guarantees for the people. And what we say at Avara is that we want to create the people-powered internet. And what that means is that by using this type of technology, we're able to give guarantees for users. So how you could access to same financial opportunities across the world without, let's say, middlemen. How do you get the same transparency and you don't have information asymmetry? How you can make the same decision with the same knowledge, with the same optionality that anyone else around the world. and I think that's really important. I think the whole world is moving towards a place where every individual has kind of like a more opportunities, financial, but also maybe also abilities to take that responsibility to themselves. So if you go 100 years back, everyone had one specific, assignment in the community, or let's say the society. For some it meant that they are farmers. For some it might mean they are workers in a factory or in an office. A common thing is that if they have any surplus, they give it to someone to manage those assets, or smart enough could actually invest into stock exchange. So I think where we're moving towards is that every single person on the planet will have the same ability to participate in financial opportunities, but those financial rails don't really exist at the moment. So we do have innovation in fintech that really democratizes a little bit of the access. It's easier to buy shares today. It's easier to understand. Savings accounts are a bit more accessible. But what I think blockchain and DeFi can do is just give a plain, same, equal access for everyone to financial opportunities. And that's yield, that can be financial assets. I think with RWAs, which is real world assets and tokenization, that creates the same opportunities for everyone to also contribute in funds and buying shares that they won't have access normally. And I also think that this is a new substrate for finance. So we went from writing financial transactions and ledgers on clayboards. We moved from that to paper. Then we moved to digital. And now we're moving on-chain, onto the blockchain, which means that we are enabling applications and protocols that can be very resilient. This means that you can build something where the whole world can trust that it doesn't break. And I think that's a really powerful system for finance.
Yeah, I love it. So, I think that gives you the platform to talk to the audience about some of your exciting updates. We understand, what you've built, the opportunity you're on, why you care about it, which I'm sure really resonates. And therefore we can understand why you're still innovating and why do you think it's important. So there's a few big updates that I've seen in the press recently and we've briefly spoke about. But yeah, I'd love for you to just talk us through a few of them. So seen this big focus on RWAs, as you just referred to, which again is part of really bringing the access and bar down for everybody to get into what has been the preserve of very privileged either organizations or individuals. So I love that. That's, I think, what fintech has always been all about, and now we're seeing the benefits. So I see partnerships there, and I'd love to know why you're taking that approach. So one big one is Chainlink, that you're partnering with. Why are you not just taking this on your own platform, A, and then B, anything that you're really excited about in the RWA space for your organization?
Yeah, I mean, with Chainlink, we've been using in the other protocol Chainlink for day one, and what Chainlink does really well is providing data onto the blockchain, because the blockchain can't read any data outside of its system. As stupid as it sounds, but that's how it works because of these constraints. And Chainlink is essentially an oracle that can provide the price data or some other information. So the information can be what's the cost of Ethereum today in dollar value, or the price data can be like, can you verify me that a specific bank account has sufficient amount of funds to prove a reserve, essentially. And I think that's a vital component for decentralized finance and protocols like Aave, because it creates the base functionality. For example, you are able to liquidate positions when you need to, and you need price feeds there. You might want to have proof of reserve of the assets that are listed on Aave to understand that has some sort of a centralization or off-chain component to understand that if they're fully backed. And for Aave specifically, our biggest announcement has been Horizon, which is a RWA initiative from Aave Labs. And what RWAs in simplicity are, they're just any type of an asset that already exists, that the value is reflected on the blockchain. So in traditional sense, let's say if there is a fund that is created on paper, typically these funds might be reflected on a database, on an investment platform, let's say like a BlackRock. Well, now BlackRock, for example, also reflects the fund ownership also in the blockchain. So by owning this piece of token of this fund that BlackRock has issued called Biddle Fund, you own a share of the fund. So you can do it on paper, you can do it on like a MySQL Postgres database on digital way or on Ethereum or other networks. So it's that simple. It's just like a new substrate for these funds. So why they're interesting is that typically assets on the blockchain has been native to those networks. So Ethereum is a native gas, kind of like a commodity token. Aave is a governance token of the whole Aave system and all the billions of value there is there. So the token holders use Aave to vote on different decisions, changing interest rates and so forth. Then we have stablecoins, and stablecoins are also RWAs. They're reflecting dollar value in a balance sheet of let's say, a stablecoin issuer. And my belief is that over time, over the next 5 years, stablecoins will maybe in a couple of years, stablecoins will outgrow the native crypto assets. And then RWAs, like securities on the blockchain, will outgrow both stablecoins and native crypto assets. So what is now happening is that we're starting to realize the benefits of decentralized finance and the blockchain, but we're realizing that the assets that are there at the moment, they don't reflect what investors invest today in the traditional finance. And now they're moving on chain. And once they move there, it becomes more easier to track these funds. It's more transparent. It's easier to subscribe as well and redeem. And most importantly, the reason why I stumbled upon on Ethereum is the programmability. It's just easy to program on top of these blockchain-based funds. So Horizon first initiative is to create a new Aave markets where you can use these RWAs that are permissioned. So the way they work differently with the native assets is that the asset issuer needs to approve a customer. Once they're approved, then you can hold the asset, whether it's in the traditional way or on the blockchain. And once you can do that, then you can use it as a collateral in Aave and then borrow stablecoins. So Horizon effectively is a new market as well, where you can use these RWAs as a collateral and borrow stablecoins against them to finance a different type of opportunity. And that's like a big thing for us, because we think the world is going towards this direction where assets are coming on chain as well.
Yeah, it's amazing, and so I can see that. I can see how that is going to work and prove through for highly liquid RWA products,
like treasury bills, for example.
Yeah, which has been a real product market fit for the last 18 months. You've got what certainly I think good platforms like Ondo, which has allowed people to, you couldn't used to put, 50,000 into something like that simply, and now you can, and you can get a 4.5% or 5% yield from it, and it's very safe, or certainly was 2 months ago. The world's obviously very crazy right now, and you can come in and out of it with high frequency. You also have things like KKR and Apollo coming through now, where
with a 9%, for example,
yeah, and things such as private equity and venture capital, which again, to afford to be an angel investor is expensive, and you often lose famously, but it's also an equally interesting strategy potentially to just be an LP into a venture capital fund who can do that, whereas now you would have an RWA tokenized version of, depending on what your interests are, being able to take a slice into one of these asset classes. But that side of the world really hasn't traditionally been immediate liquidity. This is lock your capital up for 7 or 14 years and have patient capital and really value investing. People are talking about real estate there as well, famously, since the space started, right? We'll have fractionalized ownership of real estate or fractionalized ownership of Picassos, and these are all wonderful things, and I'm sure over time solutions appear. How do you look at the RWA side of the market, which isn't liquid, and is that of interest to you equally, not at all, or absolutely?
Absolutely. I think what we can do with the tokenization with RWAs is that we can take an asset that is, for example, non-liquid for various reasons. So it might be non-liquid because it might be hard to trade a physical object, or there isn't a specific platform for that to do digitally. But once you tokenize it and you make it available, what's interesting is that there's obviously always eligibility requirements depending on the asset class, especially with securities, but the thumb kind of like a rule here is that once it's tokenized, you can then go in and out of the position if you find someone else that is interested in acquiring that token. And I think that's powerful for, because I earlier talked about the kind of vision and philosophy about making accessible financial opportunities, but also I think tokenization makes these assets very efficient. So typically venture fund, for example, when you LP in, you don't, that's a long horizon, you don't come out of there for a very long time. But with tokenization, that enables to actually maybe sell very easily your interest in that fund to someone else who wants to basically contribute. You might want to offset some of the risk as well. You can start tokenizing carry as well of different funds. So there's a lot of good companies out there that are not traded publicly because there is so much also downside on being a public company from cost perspective and also even liability perspective. So we have great companies out there that are, for example, Stripe, or even newcomers like OpenAI, that they aren't public at the moment, and the exposure is very limited to insiders, for example. Yeah,
and you've got kind of like, from certainly our generation, your Klarnas and Revoluts who've been rumored around IPOs forevermore, and you just wonder if maybe they won't now.
Yeah, I think the future might be that you go public on chain, because that's an opportunity that might happen. It might be the more streamlined path, and it's still a security. So you're buying a security token, but you're not doing it on Nasdaq. You're doing it on Ethereum, for example.
Yeah. So I think this is one of the really exciting opportunities of every generation.
Yeah.
The promise of highly liquid secondaries, and the markets have had, and this is macro, many efforts, and many industries have just never had that come through. But these things are about timing, and it does feel like with the distribution rails that have been put in place now, and a lot of the psychology, that we might be the fortunate generation, and we've been very unfortunate in many other ways, so touch wood. So that then is truly exciting. You look at it as a debenture in essence. I've bought something and I'm able to offset some of the value if I want to, or all of the value. Somebody else is able to come into a position. So you've got one side, let's call it sophisticated investors, retail, getting access, getting opportunity. And then you have the other side, to your point, where there might be organizations or the side that is providing the ability to manage the money, who previously have had to very manually go and capital raise, and as you'll know, that takes all of the time in an organization, or take the potential opportunity or risk of going into the public market. And now if we've got an opportunity where you are able to, by increasing this access, in essence increase your AUM, then it's truly fantastic opportunity. And so, looking around all of the different efforts we have in the space now, there's a big emergence of what would be called, I think, tokenization platforms. And you've had the institutions come onto this. So you mentioned BlackRock's efforts. They're working with, I'm sure, many, but they're on a Securitize, and Securitize seems to be making some incredible progress. And possibly the holy grail there is to be able to go tap the American markets, which has, due to regulatory reasons, been incredibly hard due to broker-dealer licensing and so on and so forth. And all of these things take a long time. But my level of conviction that that's coming is high, and it's really exciting. Where is, your view, and now I will ask a question from the audience on how you would think about this from a regulatory perspective. So I've got a question. While future regulation may develop to accommodate the use of tokens, how do you see DeFi developing to bridge the gap between institutional RWAs issuing securities which are regulated and have restrictions, and permissionless DeFi structures that give people exposure?
Yeah, I think it's a great question, because so far we built all the systems to be permissionless in nature, and I think that's the reason why they've been able to try it, because they're permissionless. It's easy to move liquidity around, and that's like a really big benefit of DeFi. You connect your wallet, and you put another address in the URL in your web browser, and you connect your wallet. Your account is coming along with you, and I think that's a really fast way to find new financial opportunities and stay in a good arbitrage, which is very important for wealth preservation and overall kind of like a financial wellness for people, and finding these opportunities. And they should be anyways automated by AI at some point. But when you look at, for example, RWAs and mainly like securities, there's certain constraints obviously there, because the permissionless world, you're dealing with crypto native assets that are, for example, Ethereum, governance tokens like Aave, stable coins that are not securities. And then on the other side, you are basically dealing with purely securities. So you have constraints. So Horizon's first RWA market is going to be a combination of permissioned assets that you can use as a collateral, and then you can borrow permissionlessly stable coins. So there are ways where these two worlds can combine, but I think to make it more efficient, you have to unlock some of these constraints. So, for example, if you hold BlackRock's Betel money market fund that is tokenized on chain, you have to be a customer of BlackRock. Then, if you want to hold, let's say, Apollo's credit fund, you have to be Apollo's customer. So suddenly you're starting to actually fractionalize the identity layer. And once that happens, you are starting to lose some of the efficiency as well and liquidity network effects. So I think the future is where some of these, the identity layer evolves where you have some sort of a floor requirements for the capital to move and being able to subscribe, but then you can add additional requirements on top of that floor eligibility. So I'm a firm believer of that decentralized infrastructure should be permissionless and very resilient, and we should eliminate any single point of failures. But when it comes to securities, the approach there is that we need some sort of unifying ability of the identity layer, and that then will solve all this fractionalization of liquidity.
Cheers, Stani. Just before we were recording, I kind of asked you, what's been something that you've had an interest in that's not necessarily the company which is all consuming when you've got something like you do on your hands. And you said you've collected thousands of NFTs.
Yeah. Over the years, yeah.
Which is amazing. For me, NFTs represents a few things, but I'd say culture. A part of the amazing experience there, beyond the work itself, which is sometimes amazing, not always, has been, there's a culture. People got to know each other. The access that you got to an artist, if you're a collector, is completely different than the experience I would have had 10 years ago, where you go into a gallery and it's a little bit foreign and the artist is probably dead, or certainly someone who you're not going to get to talk to. Again, a relatively walled garden. And I'm not saying that's absolutely the case in history. Those moments have changed, as we know, from Renaissance period, and then it kind of gets walled, and then so on and so forth. But it's been really cool for me just to get to know some of those characters, and I feel like it was a real moment of culture, and probably nowhere more than in Ethereum.
Yeah.
And I'd love to know, based on that, not about NFTs, although I'm interested, how you feel about the Ethereum culture today. So again, we're in April 2025, and certainly from my lens, there has been some big changes in the foundation, and there has been a lot of FUD around decisions of the foundation, and I can only from afar empathize with the leaders there, because they have a very, very big organization that's in many ways truly decentralized, and in others debatably. Love to know your view. You A, will have a great view on it, B, I'm sure you're very close to them. How do you think Ethereum is today? I'd love you to talk around perhaps if there is any misconceptions from the public here, or if you agree with them.
Yeah, I think at this point Ethereum is 10 years old, and the community is quite big in the sense that Ethereum Foundation still has a significant role in terms of like the research, maybe some events as well that they are organizing, like DEF CON, that brings a lot of people together. But a lot of Ethereum is outside of EF as well, and a lot of the contributions and discussions on Ethereum research are happening also outside of Ethereum Foundation. So I think that they do have a significant role, and I do think they've been quite quiet on DeFi over the years, even though DeFi has been the main driver of the product market fit of the whole network, in the sense of generating transactions, revenue, and there's not many actually sustainable protocols, profit-making protocols on the blockchain. Aave is one of them. There's just less than a handful. And I think more recently, EF started to pay more attention to DeFi and acknowledge the importance of that. And I think that's a good direction there for now. There's still a lot to do in terms of adoption and getting more institutions into using Ethereum and because it's the safest network to hold value. So there's initiatives like Ethereum that are also doing that. So I think it's the common misconception is that Ethereum Foundation isn't the only driver of the ecosystem. It's quite decentralized at the moment, but I do think that they're also now becoming more efficient, which is really important, and acknowledging the importance of DeFi, importance of the institutional adoption, and also the speed of innovation that needs to happen, because we need to be in a place where we can onboard every single person on chain, and that to happen we need scalability. We're not quite there yet, but we're getting closer and closer.
Amazing. And Stani, how do you look at the overall landscape where there are now many protocols? Positively, it's optionality. You watch them and you consider when they're efficient enough, with enough value for you to consider working with them. Do you have an approach where it's everybody's welcome and we want to over time work with everybody, or are you in essence hoping that Ethereum and maybe a couple of others is the future here? So just to clarify that question, if we kind of go out in your mind several years, is your solution working with hundreds of different blockchains or a few?
This is a hard one, because I truly believe that these blockchain networks will look more like an internet. So there is a lot of connectivity and networks. I do think that Ethereum is in a strong position because of the strength of the security, but also because of the EVM, the tooling to build new innovation is far more greater than anywhere else. But at the same time, I think there's a lot of good innovation happening elsewhere as well. So Aptos with Move language is a really interesting observation. Avalanche is doing really incredible work, and they have an EVM, but it's also a mental model of creating new L1s as well.
But does it matter in 7 years? Hence, a lot of people will analogize around this will be like Linux, for instance. Like a ghost in the background.
Exactly.
Like an infrastructure, like a network, as you say. I think we probably agree with that, but possibly with some nuance to it. If that's the case, then there is a universe where really certainly a few are still in existence and everything else was an effort to try and get to that position. And if that's the case, what matters? So with Ethereum, you've twice now said, scale will be one thing, but also like the integrated network that is created for being around for a long time. But the phrase that you've used is security, which of course, this is finance on a ledger, is absolutely paramount. I'm a big fan of the Move protocol from the technology, Aptos, Sui, and so on and so forth, and their traction looks really good in some ways. But why does it matter? Like, surely just Ethereum wins here, and do we need any others?
I think it matters because also from the perspective of transactions cost and ease of access. So on Ethereum, I think the main network is where the transactions are more costly, but you get the highest security. And then you have layer 2. So you kind of have this different ecosystem where you have lower transaction fees or special purpose, like Lens Chain, where we're doing social transactions instead of financial transactions, a good example. But
so in that instance, Okay, that's a great way to look at it. So
And
in that instance, it can't cost really almost anything.
Exactly.
Whereas
but you need the
if you're
security.
moving $1 million, $10 million worth of value, then in some instances it doesn't need to be instantaneous and it could cost something.
Exactly.
Yeah.
And I think that we have to move away from this world where the security cost is a light switch. It has to be like a dimmer. So social transactions, you still need some amount of security so you can guarantee ownership of your usernames, followers, your let's say a feed that you're governing with other people and contributing to, and so forth. But for example, protocols like Aave should have extreme security because in the future it's going to hold trillions worth of dollars of value. So you don't, you want to guarantee that it's very secure.
Yeah.
And then you have systems like Aptos, or let's say that where you have also innovation. So let's say if you have a system that is very resilient, you can't really innovate fast. In Aptos, you can actually innovate and improve the whole virtual machine and the system, the whole network, even every couple of months. Just as Linux would have a software update every couple of months.
Yeah.
So that's a benefit as well. So there is this kind of like a different trade-offs. And then in Avalanche, you can create an L1 on network and add as many validators as you need from security standpoint. So we're moving into a world where everything on the infrastructure side is just tooling, and you have to choose what works for you the best on that specific use case. L2s are great because you don't have to fight for block space with other types of use cases which might not be aligned with your own main use case, and that's where it's very powerful.
I love this. Drawing parallels to past technologies is useful, but not always the best thing to completely analogize. And so that has clicked for me, or turned the dimmer up. That to your original frustrations when you're in university and you're trying to launch into peer-to-peer lending, you could come across a technology that just wasn't fit for purpose.
Yeah.
And so here we have the ability that technology should be multidimensional based on user case, and the innovation of whether it's L2s or other blockchains. Over time, I can now see a vision where there's 30 or 70 providing different user cases. That makes sense. Okay, that's good. Awesome. So let's do a quick fire Mana round. If you want to elaborate, please feel free to. If you want to have a very short response, yes, no, go for it. You've got a publication that's your favorite. It could be Wired, The Economist, FT. Tell us what it is. And you've got the front page. What would be the message on the front page?
I don't know, maybe it could be Economist, and it could be equal access to finance. I kind of like that.
Maybe the FT. We're both at the FT event in a month. It's the FT. So equal access to finance.
Yes.
Amazing. Love it. At the moment, and not coffee, what keeps you up at night, Stani?
I think just thinking of the next upcoming days, that's one thing. And I'll say in overall, like, I sleep pretty well, but I still kind of like, there's a lot that goes into product development, and putting all pieces together. That's a lot of that goes in my mind. I read a lot, so I read a lot of white papers, and sometimes I read quite late during the night, so those also like keeps me up.
What is the element of that? Is it kind of desire to make sure that you fulfill the opportunity that feels like you're on top of? Is it a curious nature to always have as much knowledge at your disposal to make the right strategic decisions. They're two different things.
Yes. Yeah, I think for me it's more base knowledge, like increasing always base knowledge, especially in fields, for example, that you might not be on day to day, but gives perspective. But also I do think staying on top of things is very important. And I think in our space, the news is coming out all the time. There's a lot of innovation. It's an open source, permissionless ecosystem. So there's innovation on a daily basis that we have to keep on tracking. And I think it's also about that too.
What's been the shittest, worst, challenging moment in the entrepreneurial journey for you? If you give us a story, please.
I think probably maybe the hardest part has been always in the beginning, like just the first 2-3 years in getting the product right, and all the kind of miserable moments that go into that, and the amount of work without seeing the light in the end of the tunnel. I think that's always the worst. When you start seeing feedback loops that are more sticky, and turns the better side of the engineering, that's always more pleasant. So I think just in every startup, the first, or every product, first 1 to 3 years, even 5 years can be quite a hell.
You said it. You seem incredibly, well dispositioned and stoic in terms of. I'm not seeing any pressure affecting you. Is there
There's a lot of pressure.
Is there
invisible.
anything that you've got? A lot of this can hit you in the morning if you're not careful, right? Is there anything you've got in your morning routine that sets you up for the day?
Yeah, during the morning I usually
Scream.
I don't scream. I drink a lot of tea in the morning, so I just drink a lot of coffee and I move to tea. That's been quite good. I usually spend some time in the early morning with the kids, and then start my day very early, and try to focus on reading. And I usually dedicate most of my mornings on focus times, and then afternoons are more calls, internal and external. And
when you say reading, you still mean white papers, or you mean
messages? Basically.
Yeah, going into messages.
Yeah,
oh, yeah.
messages.
Okay. That's much more typical then.
Yeah,
I was
exactly.
I'm really impressed now. It's do not disturb until 2 p.m. and reading white papers would be when you've really got it right.
I take 2 breaks, so I don't really take a lunch break. I eat my lunch in a few minutes usually, but I take a break roughly at 5 to 6 or 6 to 7.
Yeah.
And spend some time with the family, and then I work a few more hours in the evening, and then collapse.
I can have 10 coffees at 11 p.m. and still fall straight to sleep. Is there a particular mantra or one line quote or something like this that's really dear to you that you come back to?
I always like the idea of never giving up, and once you fall, you stand up again, and I think that's a really good lesson, because there's always failures, and there's always time for successes, and I think being able to continue and never quit, I think that's something that really helps to build resiliency.
Amazing. And then we were talking about books just before the interview. Particular one that you would recommend to the audience that is even an all-time great for you, and maybe you gift, or you think is brilliant for a particular reason, or something topical, either one?
I mean, there's always the Bitcoin white paper. I recommend, because it really sets a good foundations of a resilient system. we talked recently that earlier before this podcast that I was reading about sovereign individual. So it was a book gifted by a friend. That's been quite interesting to read, and I'm still halfway through, but already based on what I read, it's quite interesting that I recommend.
Well, why is that? What's interesting about it?
I think it's we're basically moving into a world where more and more people are mobile and they can choose where they live, and they're more sovereign, and the concept of like states and nations are not as strong as they used to be. There's less of things tying people in societies, and we have to reconfigure or reestablish the connectivity between people, and also what relationship state has with people, with the people. And I think we have to think about people as customers, and how we can actually how the states can serve their people well, to keep producing and keep adding value and reinvesting into the nation. I think that's a really interesting perspective.
Yeah, and it's an interesting time for that because we saw positive progress toward globalization and then really retrenching currently in the macro political landscape, and who knows where that's going to go. But is this a potential decoupling moment for a Bitcoin is a topic people are looking at. And so this sounds like a wonderful book to read right now.
Yeah.
Put that in the show notes,
Definitely.
and when you finished it, if you want to ping that to me, love to read it. Penultimate question. We cheekily always ask if there's anyone else that you would recommend to come on the Searching for Mana show that the audience would get a load of value from. Who would that be and why?
Yeah, I mean, in our space, there's quite a lot of good people to interview. I think obviously getting here Vitalik will be interesting from technological perspective, and also because there's more and more interest in finance. So that could be really interesting. I would like to hear more about stable coins as well. So Jeremy Allaire from Circle could be.
Yep.
CEO of Circle could be interesting, and Paolo from Tether as well. I think those that come to my mind.
Jeremy sat just there. We interviewed him.
Oh, you did?
Yeah. So okay. I'll send the episode.
That's
very
amazing.
Very fortunate to interview him maybe 5 months ago, and as you say, one of the guys who's just I think done everything with the highest level of credibility, which is brilliant for the space, and also now sits on an unbelievable opportunity and platform.
Exactly.
So yeah, he's fantastic. I don't know who this Vitalik guy is, but he'd be good.
Yeah, he could be. Yeah, he could be good,
So just to set up the question, you're on the Searching for Mana show. Mana is your magic. So really underneath that, your passion. In gaming, mana is used not as your life or your power, but what your superpower is. So Stani, what would you say your mana is?
I think probably it's the resiliency. So somehow I keep continuing doing what I do.
Getting back up.
Yeah.
I would imagine that you've got 10 out of 10 resiliency. That's a good one. When you go the layer further, of course, there's many people with resiliency, and you see them so different. If you had to pair something with resiliency, what would it be?
To compare what?
You're pairing with resiliency your mana one other element.
I think just creativity.
Yeah, that makes for product that makes sense. Creativity and resiliency.
That's very important.
Is a good combination.
Yeah.
Stanley, we've taken an awful lot of your incredibly precious time. Congratulations, what you built.
Thank you so much.
Truly amazing.
There's still a lot to build.
And you also have had a family in this time as well. So.
I know how did it all.
Just give you the platform to finish. I heard the numbers trillion there, so you've got me excited. The show's about trying to find some generational leaders and entrepreneurs, or who actually Satoshi was. So we're getting closer and closer. You have, and I think it ties together the whole ecosystem you're bringing together. A big initiative around the how do you say it, family
accounts. Yeah.
If perhaps you want to talk about that specifically, and then if you finish with, and you set it as far out as you want, whether it's 2 years or 300 years, really the vision and what it is that you hope to build.
Yeah, I mean, with family accounts are quite simple. So families are iOS crypto wallet where you can just sign with email and phone number. So and family accounts is basically the same, but you can do it in web, or when you use a decentralized application, when you connect with a wallet, you have different wallet choices. So that connector is called, in most cases, ConnectKit, which is an open source tool that our team created. And you can use family accounts through this connector. So by just clicking and signing with email or phone number. So what we're trying to also do for the Web3 space is similar social logging experience as we have with Google, for example. And the reason for that is if we want to get this technology to mainstream, we have to abstract a lot of the complexity away. That's basically the concept of wallets, the concept of different networks and switching, the concept of gas and transaction fees, and then figure out how to on-ramp users cost-free into the on-chain ecosystem. So that's what we're working towards. The direction over the years is that we want anyone in the world just simply move their fiat into Aave with minimal cost, actually with zero cost, and earn yield, because we believe that DeFi will be the place where we have the algorithms to provide the best financial opportunities. And with the concept of tokenization, we get more and more opportunities within DeFi. And I truly think that DeFi can be the backbone of fintech and all these different use cases where you have the actual end user products that will be distributing DeFi to audiences. So my kind of vision is that at some point Aave can distribute yield to 8 billion people, and it's only possible with Aave DeFi by using family accounts and making it super simple to interact, and with minimal cost as well.
Amazing. Yeah, I love it. Super exciting. I think it's only a question of timing, and you keep getting back up.
Yeah.
And we're going to get there. Thank you so much for your time.
Thanks
Such
for
an
having me
amazing
here,
guest. Thank you so much, Stani.
Thank you so much.
Awesome.
Thank you so much.
That's great.
Yeah, that was really good.
Thank you for joining us on this edition of the Searching for Mana podcast. We hope you've enjoyed it and hope to see you again next time. Please subscribe to our YouTube, Spotify, or iTunes to make sure you receive all the latest episodes as they are released.